This is the FFR Trading Market Minute, and this is a monthly candlestick chart of the VIX. The VIX is roughly inversely correlated with the S&P. So as the VIX is moving lower, the S&P tends to move higher. And as the VIX is moving higher, that means the market is moving lower. What we've seen is the VIX has come back down kind of towards these kind of historic lows. So again, this is a monthly chart. This low peak or this low bottom here is 1993. 2007 in here, right? That's just before the market crashed, and you see these big spikes tend to come out of these lows in the VIX, and we're sitting around 13 and change in the VIX, but we start getting down, to these levels here. It's going to be something to watch. That's probably where we're going to see a market top. We're not there yet, but if we see the VIX come down kind of to those, get below 11, you can see then there's a risk of getting these big spikes, which means if the VIX spikes higher, the market is going to be moving lower. So something to kind of pay attention as we move forward into this, I think, probably last leg up, probably through the new year. We'll have our move up into the holiday again, and then after the new year, I think maybe the market starts to lose some steam up here and is due for a pullback. And back to a daily chart of the SPY here. Last week, we had closed here on Wednesday, and I said at the time that the RSI here was overbought. We had a gap to fill below the market, so I felt the market would start to pull back and fill this gap back here, which we've done. Went a little deeper into that support, not quite down to the moving average, which was the next level of support there, before we did get a bit of a rally here. Now, we've got a Fed announcement that's set for Wednesday at 2 p.m. And so typically what happens when we get into that, closer to that Fed meeting, the market starts to go sideways. Probably not a lot of big institutions taking big positions one way or the other ahead of that meeting until we get that sorted out. Will the Fed, the anticipation is that there will be perhaps a 25 basis point cut in rates, and then the language after that may say that the Fed is going to hold pat here. We did have inflation start to tick up a little higher, and so that might be a concern for the Fed moving forward, and we'll see how the market reacts. The next upside target will be the 610 level. Again, this could be an area where the market starts to react and maybe some selling comes in here. We'll see. Below the support here will be the moving average support to the downside. So those are kind of the areas we're looking at heading into the Fed meeting anyway. Let the Fed meeting happen. Let's see what we get there, and we'll see what the analysis looks like after the Fed meeting. Plenty of economic data set to be released next week before the holiday. We've got S&P Global Manufacturing and Services PMI on Monday, Tuesday's retail sales. Wednesday is going to be the big interest rate decision from the Fed, Thursday GDP, and Friday's core PCE. Hope that helps. We'll see you back next week in the FFR Trading Market Minute.